Hello traders, Gary Wagner here, just about noon in Honolulu, 6 o'clock in New York. It is Thursday, 7th day of September, 2017, and this is the Daily Report for Gold and Silver. Nice upside surge in the precious metals markets, carrying gold well above $13.50, up $15, closing at $13.54 today. The low, I believe, was $13.36 or 37. Silver also showing a nice upside move, closing above $18 at $18.19. That's a 28-cent rise. We had the U.S. dollar under tremendous pressure, and that accounted for about 3/4 of the move in precious metals. In other words, there was buying along with a weak U.S. dollar, off 61 points at 91.64. And slight movement in U.S. equities with the Dow Jones Industrial Average closing at 21,784, 63.97 in the NASDAQ, and 24.65 in the S&P 500. Traders, we certainly have an upside surge in the precious metals today, with gold trading over a full percentage point, settling at $13.5330. This move in reaction to a weaker U.S. dollar that provided a large portion of today's gains, but there was also buying in the market, and the combination, that 1-2 punch, is really what has resulted in this dramatic rise today. And so according to the Kitco Gold Index, as you can see, it's absolutely a combination. Traders, if you recall from yesterday's show, I talked about our current position as well as our current strategy. We also raised our stops. All stops now should be sitting below 1333. And the rationale behind that was the fact that this is a one-to-one relationship between this first wave of this current rally, the correction that followed, and then this leg of the rally being the third leg, meaning it had to, according to Elliott wave theory, at least be a one-to-one relationship between wave 1 and wave 3. That would be this wave here. On top of that, we have a fib extension of this particular leg of the rally beginning at our correction. You can see right here and here, and then our subsequent different areas that we want to look at, because those are the price potentials that we believe have the highest probability of working themselves out. The next level is a 1.23 extension, and that comes in at 1351.60. And what I said in yesterday's show is that could provide an area in which we would see some sort of resistance. As you could see, for the 2 days prior to today, we certainly saw some resistance in the market in this area. So today we had a very effective close above that price point at 1253, which puts our next target right within the realm of possibilities. And that is a 1.618% extension of wave 1, which is very typical in a strong Elliott wave move, where you have a wave 1, you have a small corrective wave, and then your wave 3 is a 1.618 extension of wave 1. I've seen that occur in gold many, many times. It amounts to approximately 160 to 180 point rally. Therefore, we want to see if this market is going to effectively form some sort of a level of support above 1350. If it does, we are looking to add to our current position. We're going to keep our stop right where it is at 1332. The key to that is that it is below 1334. I believe our low today was 1337. Our low yesterday was 1336. If in fact we see the market find solid support here and begin to rise off of this price point, we are absolutely looking at a challenge of last year's high. And traders, one of the reasons I feel so solid about this particular price point as not only achievable is because if we draw a line across from last year's highs up at around 1380, there's absolutely no doubt that these highs from last year to the number match with this 1.681 extension of the current rally that we are on. And to me, that says that that is highly achievable. Traders, maintain your current long position, maintain your current stop. We will look to see how the market reacts now that it has achieved and taken out 1350 on a closing basis, and that to me is what is critical. And now it is simply a matter of it consolidating, forming a base in this area, and moving to higher ground. And traders, this most recent decline in dollar value, the dollar at 91.47, closing off 0.8%, is key in looking at the current price of gold. More importantly, today's price has definitely, on a technical basis, broken below a critical level on the charts, and that's a level of 92. 92, as you know, was a level we were looking for the dollar to fall to. We certainly got that. At this point, I expected to possibly see a bounce. If it's going to find some sort of support, it certainly would look to find support here. We're looking at a weekly chart, and we can see that over this last month, it has tested these lows, but not broken below these lows. That changed significantly today as this market plunged through that price point and is now trading well below 92 at 91.46. If we convert this to a daily chart, you can see the extent of damage on today's move, but we've taken out this former low that we got about a week ago, and we are at a low that we have not seen since May of 2016. So we have taken out that low on a technical basis. There really isn't any real support that could come into this market until about 88. And the reason that I'm looking at that price point is that when we see the way the market rose back in 2014, it was almost an exponential climb up to 100 on the dollar index. But there's really nothing between these two price points. And so the next logical point, if we see continued pressure on the dollar, is got to be somewhere around 88. Traders, on yesterday's show, we talked about the fact that we were going to define our current strategy. We've got a great trade right now, regardless of what the market does from here, in that we have moved our stops effectively to about 1333. Market is in the 1350 area, and we talked about the fact that a key level of potential resistance was at 1351, and we were looking to see if the market could have an effective close above that. We certainly got that. Now it's a matter of whether gold prices can form a base here and show this is a solid support level, because if in fact that is what occurs, then we will look to add to our current long position, and traders who are flat will have an initial entry point. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.